I've been telling my wife, do you understand that if we put X number of dollars today, when he is 18, this will be on the account? Do you understand that top-notch school that is costing you now, $500,000 probably, 4 years, can be bought with $100,000 today, for example. And that excites me. And I think these are the types of investments that you can make now that I wasn't educated about before. Even when I was 24, regardless of my risk appetite and the whole entrepreneurial spirit, I would be putting some money on the side and investing in this type of compounding asset classes.
I'm a father as well. And I was just speaking to my wife. It was her birthday, so we're talking about how do you see life. We no longer think about life in 1 year snippets. We think about life, how do you see life in 14 years? So after my eldest is university, how would we want to live 10 years out? So you start thinking about life in bigger segments, like from now until my child is of this stage, and it creates a longer time horizon.
And then now when I think about it, I'm like, we have, 6 more years before he really starts going to school, or we have 15 more years before he needs to go to college. And I'm like, we have a lot of time. We have enough time.
Today, we are pleased to be hosting Vuk Zlatarov, co-founder and CEO of Poddster. Poddster is a pioneering network of video podcast production studios and Dubai's first podcasting community. He is also the managing partner of Creative Ventures, a venture builder focused on product acceleration and go-to-market routes for early-stage ideas with hubs in APAC, MENA, and Europe. Vuk launched his own podcast, The Change Officer, in 2020 because he wanted a smarter way to build meaningful relationships with people who could positively influence his life and business. After 2 years, 200 episodes, and a transformational journey, Vuk decided to create Poddster to make professional podcast production available to everyone. Vuk, welcome to the show.
Thank you. Thank you for having me.
Yeah, so I did quite an introduction, but I would like to hear the introduction from your end. So tell us who's Vuk on a personal level.
So, you summed it up from the business side. On a personal level, I guess an entrepreneur in its core. Day I graduated, I started my entrepreneurial journey, moved to Dubai. That was 10 years ago now. With an idea of exploring that adventure with a friend of mine. And that idea and that adventure turned out to be a 10 years a long journey of learning about business, learning about myself, learning about life beyond the borders of the country where I was born, Serbia. And in general, one life-transforming experience for me. So 10 years later, I'm married. From a month ago, I'm a father as well.
Oh, congrats.
Thank you, And I have 3 other children in 3 other businesses that I'm taking care of.
Oh, there we go. Those are the demanding children.
I'm not sure, which one is more difficult to work with. That's pretty much it.
Okay, very nice. Well, so you've been through quite a journey because you came to Dubai then 10 years ago, gone through that entrepreneurial journey, succeeded at it, started a family.
Let's define what a success means, but
well, I would define definitely Poddster as a success, right? We use the studio right now. It's always fully booked, and you've done exceptionally well for yourself. So through that journey, I would say, I'm sure this question would be differently answered throughout it all, but I'll probably ask it in terms of the frame of mind of today. What does wealth mean to you today?
The definition of wealth, I guess, evolves over time as you grow, right? A month ago, I was blessed to, receive my first child. So probably today I would define wealth differently than I would define it 2 months ago. Now top of mind is family, now kids, in future kids probably, happiness, health. Probably that's the true meaning of wealth. 2 months ago it was companies, money, cars. So I guess it's really, I'm not one of those persons that is saying, hey, money is not important. It's all about love, health, happiness. I think money is important and is allowing you to live a certain lifestyle and in a certain comfort. But definitely true meaning of wealth cannot be described without talking about these other things that usually cannot be both, right? Which are relationships, your social circle, your family, your friends, and the time that you're spending with them.
Nice. And how has that relationship changed with how you think about wealth, let's say, comparison to when you first moved to Dubai?
So, I mean, as mentioned, like recently it changed dramatically, and probably it's going to change over time even more. When I moved to Dubai, I was young, inexperienced. I didn't really know anything about, I wouldn't say life, but definitely anything about business. And all we ever wanted was to build the next $1 billion company, right? Our first business was a software development firm, agency. We built software for, end clients. And we always dreamed about building this global company that is worth billions, exiting that company and then buying yachts and islands and so on. So that was me at 24. At 26, 7, I already went down from billions to maybe hundreds of millions. Then when I was 28, and I reached around 10 millions mark.
Yeah.
So I think this really evolves, and I think your risk appetite and where you investing your money in a way and how you treat money and wealth changes over time. I think that when I moved here, I was, risk all the way and living from salary to salary and like investing everything or spending everything either on myself or on a company. As you grow, I think you start realizing that things change overnight, and that fear of losing the comfort or losing the stability is what's kicking in, and then you start thinking more strategically about wealth, right? That refers to money and other things. So I think today I'm definitely thinking a lot more about next few years and whether I'm stable enough to have my emergency funds. Can I potentially reach that what's called financial freedom? What does financial freedom mean for me? How much do I need to have in order to unlock financial freedom? So you start asking yourself some questions that probably 10 years ago I would be laughing at, and I was like, come on, like, why are you thinking about that? So things definitely change.
So yeah, I think that's a very good point, and I think it happens to most people, which is when you're younger, or let me put it in a different way, to create wealth, you need to take risks. You need to take risks to create that wealth. And when you're younger, that's generally the feeling most people have. But when you have wealth, your aim is, now you've made it, you know the hardship of how hard it took you to make it. And now it becomes more of a, how do I put chips off the table? How do I preserve more? So do you feel like the change in that behavior towards risk, of building that financial independence, or that emergency fund, or that putting chips off the table, do you think that's a byproduct more of your age, or do you think that's a byproduct of your level of wealth having increased due to the fact that you took the risk and you accumulated wealth, and now you have a different relationship with it now that you've got into a different wealth mark?
So I don't think that necessarily has anything to do with age. There are people in the same age that are treating or approaching life differently, right? There are people at my age that are still, living like I was living when I was 24. And maybe that's the right way to do it. I mean, maybe you should live a life without worrying too much about what's going to happen in the future, because, life is long, and one thing is, certain. If you manage to reach certain, wealth level until now, you can do it again. If you did it once, you can do it again. And I think this is something that I need to keep reminding myself whenever I get that fear coming in and thinking about what if everything stops, or what if Poddster just stops operating, and what I'm going to do next. So I think that it's just about maturity and personal preferences. My previous 10 years, or even my previous 20 years, if you include my, in a way, childhood and me growing up, I guess wired me in a way that I really want to reach the stage where I am safe. I have the safety net. If I don't have to, I don't work. And I think this is the feeling that I am pursuing, that if everything stops now, I'm okay. Me and my family are okay, and we can continue living without any direct income. We can live off passive income and the investments that we made. The byproduct of that is an immense pressure that is being put on you on the daily basis, that you need to reach that goal fast. Whereas if you would look at life through a 20-year lens instead of 2-year lens that I have now, for example, or 3-year lens, the mathematic behind what you have to earn changes completely.
Yeah, definitely.
So I think I'm maturing and evolving every day, and then that whole approach and strategy is changing every day.
And how difficult is it to change that strategy when you've always been focused on entrepreneurship and focused on being actively involved? Because passive income is about being able to generate income whether or not you're being involved in the business. Yeah. So how different is active income than passive income, and how difficult is it, if any, for someone such as yourself to move towards passive income?
I don't think it's difficult. I think you just need to understand and make a decision that you want to pursue those type of opportunities. I still have friends at my age or older than me who are still not thinking about any passive income investments. They're going all in. No matter what they make, they're going to reinvest everything into another business and keep whatever they need on yearly basis for the lifestyle. I think it just depends. For me, it's becoming very easy because I realized that I don't feel comfortable depending on the performance of my business all the time. I understand that things can change and the markets can change, and we saw that, and that your business can, underperform. So I don't feel comfortable relying on something like that. So then I started thinking, okay, how can I generate enough safe income and passive income coming in so that I can do business out of pure passion and call it a hobby rather than a need. I think anything that you in life that you have to do without an option not to do is not healthy in a way, whether you have a career and you're working for someone or you're running your own business. So ideally that's where I would like to be, and probably that's what's called freedom, right? That you have freedom to choose where you're going to do tomorrow.
Fantastic. Yeah, optionality creates value, right? Having optionality. It's interesting because a lot of people in their 20s, or it's also not about age, but in their earlier career, always think about, I want to succeed in business, I want to succeed in that to reduce anxiety. Because a lot of it is, I want to succeed, I want to reduce my anxiety of the future. And then also when we get to success, we still have anxiety, because you have the anxiety of what happens if I lose it all, and what happens if I do this wrong or do that. So the anxiety continues. So how do you deal with that anxiety?
I don't know. It becomes modus operandi, right? It becomes the way how you operate. I think I just got used to it. I don't have a solution for that.
Okay.
I wake up with anxiety, I go to bed with anxiety.
Okay.
There is, it's a part of, I just think it's a part of entrepreneurship. I never met an entrepreneur or a businessman who told me, I solved it. I'm not anxious. I don't worry about the future of my business, or whether it's healthy. I don't think it's healthy. I think it just comes as a byproduct of your ambitions and your desires to grow.
Makes sense. And outside building passive income or financial independence, outside of the wealth side, is there anything else you try to do to alleviate that or to remove that anxiety? Is there, from a health perspective, from a sleep perspective, is there something else that you've been trying to do to help with that anxiety, or do you feel like that's just part and parcel and I have to just accept it?
Obviously, you're asking yourself that question all the time, and you're always working on some daily routines that are helping you get, in charge and reduce the amount of anxiety that you're feeling. Obviously, this is not out of proportions, and I'm not at a level where I cannot handle it. For me, what's helping me reduce it is having a plan, having answers to the questions that are bothering me. Usually, anxiety comes out of feeling unsure about open questions or things that have to be done, or not having a plan for the problems that you're facing. So whenever I feel that anxiety level went beyond of what I feel comfortable with, I literally take a pen and paper, just write down from top of my mind what are the 5-10 things that are bothering me at that particular point, no matter how big or small they are. And I just quickly write down the solutions, whether I can do something about it, whether I cannot do something about it. If I can, what I'm going to do about it, and I'll make a small plan. The moment I have that plan in my hands, I feel okay, it's good. Things are fine. You'll figure it out. So I think that's one way to deal with it. Another way to deal with it is just to take your attention away. Spend time with friends, family, have a conversation with someone who is not, from the business world, your friends. Just have fun. And I think this is something that is important to practice when you are either owning and running a business or involved in a business that you feel ownership over, or you're owning a P&L, or you're responsible in the business. I think it's very important to find distractions that are going to pull your attention away from that. Otherwise, you're just going to keep thinking about it all the time.
Yeah, makes sense.
So that helps as well.
I've seen many people go through retirement through my career, and through seeing people go through retirement, commonality of people who know how to retire well versus not retire well. Number one is hobbies, and number two is relationships. People who don't know how to retire well, usually they don't have established hobbies or a way to fill up their time. And number two, it's they don't have as much time to spend on relationships that they've built over time. So do you do any building of hobbies from now? Is that something you already do, or not yet?
Man, I'm like, I have so many hobbies that I have, and hobbies on my list that I'm just waiting for the time to do all of them. So I think, I don't know. I feel there are people who make a lot of money and don't know how to spend that money. I think I will spend my money really well when I reach the stage to have enough time. So I'm a passionate motorcyclist, so I ride a lot, touring adventures, long trips, starting with some sailing now. Nice. I'm diving. I like outdoor in general. I'm already telling my wife that we are going to be living on the boat for a few years as soon as the sun is more than 3 or 4 years. So I think that's very important, and I think you need to find other things that occupy your mind in the spare time.
Okay, so we don't have to worry about you in retirement. That means
don't worry about me. I'm gonna invite you to join me on the sailboat.
I'll be joining. And for you mentioned your son, so how have things changed in terms of how you think about wealth, specifically in terms of having a son? Now, I know it's early, it's 1 month in, but also there's that point of preparing for it. So how do you think differently about wealth, business?
Yeah. Well, as you said, it's definitely early, and I'm still kind of, processing everything and then becoming a father. But one thing that probably a few years back I wouldn't be thinking about is the power of compounding effect and compound interest. And literally I've been telling my wife, like, do you understand that if we put X number of dollars today, when he is 18, this will be on the account? Do you understand that top-notch school that is costing you now, what, $500,000 probably, 4 years, can be bought with $100,000 today, for example. And that excites me. And I think these are the types of investments that you can make now that I wasn't educated about before. If I was, probably even when I was 24, regardless of my risk appetite and the whole entrepreneurial spirit, I would be putting some money on the side and investing in this type of compounding asset classes. So things like that. I started thinking about it already.
It gives you a longer time horizon, right? Because now you think about life, because I'm a father as well. And I was just speaking to my wife, was it past few days? We were talking about, it was her birthday, so we're talking about how do you see life we no longer think about life in 1 year snippets. We think about life, how do you see life in 14 years? So after my eldest is university, okay, how would we want to live 10 years out? So you start thinking about life in bigger segments. It's like from now until my child is of this stage, and it creates a longer time horizon of
100%.
the way you think.
And now when I think about it, I'm like, we have, I don't know, 6 more years before he really starts going to school, or like we have 15 more years before he needs to go to college. Like we have a lot of time. We have enough time.
So you've touched upon on how you want to build that financial independence through passive income. So do you have plans in place on how to do that?
So, I mean, in a way, I have this one board where I'm always doing calculations about the investments and where we're going to put some money in and where we're going to buy, or whether it's real estate or stock market or ETFs and index funds and so on. What I did, for example, a year ago, I had I think it was not more than 3 years horizon of hitting the goal. And I remember, because it was so aggressive, that I felt under an enormous pressure that although business was performing and I should be celebrating the success and I should be celebrating myself for performing well, because my goals were so high, that felt like an underperformance. And I realized that by all means, I should be considered as maybe even a top performer when it comes to the results that I'm making for myself. I would be looking at the results and I was like, this is not enough. I need more. I'm not going to hit my target in 3 years. I'm going to be financially independent. What am I going to do? Do I need to start another business, or the business not performing well? To the level where I was even coming back to the business and I was almost sharing that energy with the rest of the team, right? And then I said, okay, chill, calm down. And then I said, forget about 3 years, and I stretched it over 10 years. And I said, either way, even if you hit that financial freedom in 3 years, you're not going to stop working. You're going to continue doing it. It's okay. You don't have to do it in 3 years. The moment I stretched it over 10 years, I relaxed. And I said, oh, it's fine. You're actually performing better than what you need to be doing. So I think it's all about really what are the goals that you're setting that directly impacts on how you feel about that. So now it's just year by year, and you have your split of how much are you willing to spend on life and lifestyle and travel and so on, and how much do you want to invest, and then thinking about where you're going to invest. A bit of real estate, a bit of stocks. I'm not doing crypto, but I feel these days everyone feels like they missed on the.
That's the thing with crypto, right? When it's doing well, you feel left out, and then when it's doing poorly, you think it's kind of a good idea and join the boat late.
Yeah. So that's it.
When it comes to the region, we've done a lot of data about the region, and it shows that the region, especially in the UAE, people are very underinvested, and we see statistically that people that are affluent or high net worth, they have around 80% of their financial wealth in cash. So people are very much overcashed, underinvested. Do you relate with that problem? Do you see that problem either on a personal level or through your circle of friends, or is your circle much more entrepreneurial, so you haven't seen that problem exist?
I did see that problem in the market, and sometimes I really feel surprised that you speak to people who are educated, at a later stage in their career, global citizens, and when you talk to them about stock markets or any investment that is not a real estate, it doesn't feel that they're really educated enough or they understand enough, and that really surprises me, because I always expected, okay, where I'm coming from, the system didn't educate you about that. I was expecting that, some countries from around the world, especially talking about West and so on, people would be aware of how things operate and work, and they would be making moves towards these type of investments, etc. And then you realize a lot of them sits on cash and is just waiting for the opportunity to invest. So with our venture building studio, we saw a lot of these type of or met a lot of these type of people, senior corporate exec, made quite a decent amount of cash and is looking to invest in startups and so on. So I'm not sure what's the reason for that, whether that's self-driven, them not exploring enough and educating themselves enough, or is just the system that is not educating you on the opportunities.
So how did you go about education? Because the way I look at education about investing is, even if you learn at a young age, if I learn it at 17 or 18, a lot of things that we learn at a young age don't stick with us for a while. And the time to start thinking about financial independence or diversification or not holding too much cash is usually by the time you hold wealth. So it takes some time. So a lot of it relies on the person and on the media and the environment we're living in to get that education at an age where you need it. So on demand. So how did you, so the fact that you're saying stocks, ETFs and diversification, it seems like you've went down that hole to get that education. So how have you gone about it?
It was just curiosity, self-driven. First time I heard about it, understood the concepts, went down the rabbit hole, as you said, and started learning, reading all of the one-on-ones and playbooks on investments and forums and stuff. And then it's not difficult to learn about it. The concept is very, very simple. And the most fascinating part about the whole investment game is that part about nobody can beat the market, or very few people can beat the market, and you still see a lot of people who are trying to beat the market.
It's very common.
Although they understand as well that they can't. On the long run, they can't. So it's interesting to observe, that whole thing. So I think in my case, it was completely self-driven.
Mostly
online, like YouTube, the Intelligent Investor and all of the other,
Benjamin Graham.
Books that the classics that you can read. For me, the big one was Bogleheads Forum.
Bogleheads is a big one. Yeah,
they have a great wiki type of section. That one really explained inside out how do you handle and invest in ETFs and index funds. And once you understand it, then it's just about making the move.
Yeah.
And that's the next step where I think, people then just, sometimes it almost sounds too good to be true.
Yeah.
When you think about it, and when you do the math, you're like, is it really like, I put like 100K now and 20 years later, or not to mention 30, 40, 50 years later, it becomes a big number.
Yeah, probably will be minimum of like 10x, I would say.
What's the most mind-blowing idea of actually taking $100,000, putting it now and say, this is not for me or for my son's generation. This is for my grandson's generation.
There you go.
With $100,000, you made your whole family 3 millionaires.
You put $100,000 aside. You put it for your... If you say that your son gets another child when they are 30, by the time your grandchild is 60 years old, you've given them 30
years. That's 90. By the time my grandchild is 30 years old.
30. So that's 60 total years, right? Total. Yeah, that's $30 million.
$30 million.
It makes a big impact, right?
And imagine leave it for another 10, because then it becomes growing. It starts growing exponentially. Yeah. So I think understanding that concept changes your perspective of how you see, if we still, define wealth as money, or we say it's the same thing, which is not really, but talking about money. That one thing, that one concept, I think changes your perspective completely. And you can see when you're speaking to someone who doesn't understand that concept, how the whole perspective is completely different.
That makes sense. I think it's very important to talk about what you said in terms of Bogleheads for people who don't know. Bogleheads is a forum. So there's an individual, Jack Bogle, he started the idea of passive investing. So just investing in as many different companies as possible, and no need for an active fund manager to go and select companies. It's just biggest company gets biggest allocation. That's the passive indexing, passive investing, and ETF investing. And Bogleheads is a community that just really goes on that, and it's an amazing community and forum where you can not only just learn, you can ask questions and you'll get answers. So definitely
there's a UAE chapter as well.
It's a UAE chapter. They talk about investing as an expat, how to choose which ETFs sometimes as well. So for people who like to do it themselves, it's a help. But what's very interesting from that is that's very much from a do-it-yourself investor. From being in the region, I've been in the UAE for 14 years now. And there's a very negative reputation on financial services and financial advisory section. And I always call it financial advisors in quotation because I feel like it doesn't exist in this market. So have you had any experience with financial advisors or wealth managers at all?
Not enough so that they can form an opinion. Spoke to a few, just casual conversations. So yeah, not really a lot of experience.
Okay. From your wider circle in terms of how people have gone about investing, have you had other people that you've impacted who have followed a similar strategy of the way you've gone about things?
Yeah, so I have a number of friends in my circles who followed the same strategy. Some of them performed really well. Some of them I learned from a lot. Some of them managed to ride a wave and then peaked, and then I felt like, okay, maybe you can beat the market. But let's wait another 5 years and see how that goes. But it's inspiring, and I think it's very important to find people you can learn from and surround yourself with the right type of mindset.
I saw a data point recently, which was, I forgot over what time period, but only 30% of people can beat, and this is professional managers, 30% of people can beat the market over this time period. But if you give the same people an extra time period of 5 years, let's say, then again, only 30% of the 30%. So essentially, it's almost like these people could almost be justified by, they could be lucky because then even these people couldn't continuously outperform on the long run.
What was the time horizon?
I would have to get the data and get back, and I can put it in the notes here.
Yeah, I think even
but I think it was like 5 years and 5
Yeah.
years, because over 1 year you're gonna have something like 40% can outbeat the market because there's not enough time to do it. But over 5 years you'll realize most people do not, and then if you give them 5 more years,
it's almost impossible. Yeah.
So usually a good time horizon is 10 years. 5 years is indicative, 10 years is a proper time horizon. Over 10 years, the data in terms of people's ability to beat the market is ridiculous.
And I think it's also important to understand the market and kind of read the market. I think at least my generation, or I was too young when the previous crash happened, which was probably 2008. What was it like 2008?
2008, yeah.
8, 9.
Yeah.
I was just starting with my college. I mean, I didn't have I didn't know what stock market, not to think about it. Now, when 2020 happened, I was in my 30s. Business went down. I didn't have any cash. I mean, I wasn't ready to invest. But now I witnessed the opportunity that the market crash brings to the investors. And I told myself, next time, my friend, you have to be ready.
Let's see if you do it. I look forward. I'm going to give you a call.
Let's
when it happens next time, see if you do it. Because usually it's hard. It's hard to do, right? Like you think about COVID. COVID markets, equity markets went down around 35% top to bottom until like March 21st, 2020. And the bottom, the general attitude of people they were locked in, locked in at home, no cars on the streets, and people were thinking, it's going to go down further. And I remember I was a wealth advisor at the time, and a lot of people were saying it's going to go down further.
What was your advice?
My advice is always hold. It's you own real companies. You own real companies, and real companies are not affected by today. When you're buying a company, you're buying it for its future earnings. So whatever happens today or this year, that's only 5 to 10% of its value is what happens this year. What you're really buying is its future profitability. And if you're diversified well enough, then some businesses get affected, some businesses do well, world continues to live. So the first recommendation is always hold. Now, most clients shouldn't have cash on the sideline. Like if you think about it, proper financial planning, you shouldn't have cash on the sideline. If you do have cash on the sideline, then most likely you haven't been invested because you're already scared. And these people would be very highly unlikely to invest when markets are down, because otherwise they would have been invested. So usually the second recommendation is if you are over cashed, instead of timing the market, accelerate your ability to enter the market at cheaper prices. Now with COVID it was tough because it came back up pretty fast, but usually it's like, okay, start thinking about investing monthly from here. Now there was some advice, like you'd see some people who were like, sell, go to cash, wait for markets to go down further, invest. You should never do that.
Yeah,
right?
That's very risky.
Very risky.
You're risking a lot.
Definitely. It's hold Invest. If
Yeah.
you have a balanced portfolio of bonds and equities, selling bonds, investing in equities when it's down.
How do you explain Warren Buffett now sitting on how much cash?
I think Warren Buffett is a very interesting one because Warren Buffett's financial objectives are not financial independence. You think about Warren Buffett. Warren Buffett has gotten to a point of wealth, and a lot of different people have gotten to a point of wealth where their legacy is mostly going to be towards charity or foundations, etc. So the way they think about money is very different. So if you look at Warren Buffett invests in few companies, and it's been his entire career to do so. So he keeps a rather large allocation towards cash to be opportunistic about the market. And they made a big shout about him selling Apple, but he still has around 10 to 20% of his total net wealth is in Apple. So there's a large amount that he still has. I think the amount of cash he has on the side could be opportunistic.
Yeah.
At the same time, if you look at Warren Buffett, he is probably one of the biggest proponents for boggleheads. He's one of the biggest people who says, don't do what I do.
Yeah.
Diversify fully. And I'm sure if Warren Buffett had $10 million only, he would be operating on a very different basis than it is his active career. And also, I think there's some good data we have on Warren Buffett that I can share in the notes of this and share with you as well.
Yeah, that's interesting because I was listening to, he's selling shares, he has accumulating cash, and I think at this stage it's like something like $300 billion or something like that he's sitting on, and then it seems like, is he waiting for an opportunity to get in somewhere now, or what is he doing with all that cash? And this is just on what you said, that people who are sitting on cash probably haven't invested before, or there was something else. So I feel like it would be a nice thing to have some cash on the side when the next drop comes, at least to buy a property or something like that.
Yeah, I think having cash on the side. Usually, the way you do in financial planning is you have around 20 to 40% of your portfolio in bonds. And what would usually happen is in 2008 like scenario, money will move out of equities and go into bonds.
Yeah.
So the bonds give you the fixed income, it gives you reliability, but then when markets crash, you have that bonds that can allocate towards opportunistic investment. So then it becomes a question of, should I be holding cash or bonds? And the only difference in cash or bonds is with bonds, I have a reliable fixed income that I can predict. So I know over the next 5 years, I'm going to be making 5% a year. While in cash, I'm making 5% today. Most people are not. But I should be able to make today 4.5 to 5% on cash. But I don't know how much I'm going to be making on cash next year. So bonds just fix that. But yeah, usually opportunistic portfolios, you do have an allocation to it, but nowhere near 80% in cash.
You need to listen to the episode of Acquired podcast.
Acquired. Oh yeah, I know about Acquired.
On Renaissance technology.
Renaissance technology. Is it Renaissance as in the hedge fund Renaissance?
I don't know. These are the bunch of geeks who created this algorithm that is generating like average of 30+% or even more return on yearly basis for the previous 60 years. So now people are questioning because it's not public data, it's a closed fund, private fund.
Oh yes,
with just a limited number of people who can access
Ray
it.
Dalio's fund. Medallion.
No, or maybe different. Or maybe they work together.
Okay.
But it's interesting also. There is a great episode on Acquired.
Okay, I'll check it out. I'll look into that. Considering your journey that has given you a very strong experience of how to understand money and how to deal with it, what would be the one piece of advice you'd give listeners?
Yeah, it depends obviously who is listening and who are you giving the advice to. I don't think that there is a general advice. I think if you haven't heard about compound interest and general compounding as a concept, definitely learn about that. I think that just changes the way how you think about money and what money can do for you. One piece of advice that I usually always emphasize when it comes to businesses and money is never borrow money to fix or to fill the hole in your P&L. Always borrow money to make more money. So if you're going to borrow money, borrow it to invest into something that is going to make you money. Don't borrow money just to fix a gap of 2 months in your P&L on operational expenses. Telling you from the experience.
I can see it.
You fix it once and then you pay the debt for the next 5 years. So yeah, I mean, I don't know. Inspire me.
No, I think that's good. I think compounding interest. I think
I think
compounding interest
compounding
makes a lot of
interest
sense. Makes a lot of sense.
Yeah. I recently had a chat with, let's say one of my family members. Basically, it was along the lines, hey, I just bought the apartment and I bought the car. I have some cash. I don't know what to do now. I have the apartment, I have the car. And I was like, well, there's a lot of things that you can do after, securing yourself with those two basic assets that everyone needs in life.
Yeah.
But unless there is, you have it in you that kind of needs to pursue and learn about something like this, if you don't have it in you, if you just don't find it in you, it's difficult to go and learn about it.
If you have to be passionate to
if
learn.
You don't feel the threat or the pain or the fear, it's difficult to find motivation to go and learn about it. So, but if you're curious and have 1 hour of your time, just read about compounding interest and think about investing 100,000 now for your future generations.
Let's make 30 million in 60 years. Why not? Well, that was a great episode, and thank you for your time, and it was a pleasure having you.
Thank you for having me.
Thank you.
I enjoyed it.